This is CNBC's Worldwide Exchange, broadcast live from Asia, Europe, and the United States.
16 minutes past the hour, and despite predictions of a slowdown in the U.S., earnings still remain positive. We've got more big names reporting today, including Coca-Cola, Johnson & Johnson before the bell. What should you be doing? What's going to happen with the markets? Joining us now for more is Rainier Felix Donner. He's Director of Investment Management at Helvetia Wealth. Felix, good to see you. You know, I'm wondering, the expectations for this earnings season were so low, especially when it comes to the blue chips. Are we set up maybe for a rally if we get some nice, serious upside surprises here?
That's a very good question. I think that's a very, very important period coming up now, as there's a lot of uncertainty in the market about the further direction of the Fed interest rates and whether there's a soft or a hard landing of U.S. economy. We expect the earnings slightly better than what is anticipated in the market, but we are still a bit cautious on the other side. So it's a question of asset allocation that we favor other asset classes than equities. But coming back to your question, earnings, we believe, slightly better. And everybody's watching it, also the Fed, to get a better indication of how the U.S. economy is really doing, how strong they are, how healthy they are. So it's a very important time, an interesting period coming up now.
So Rainier, it's Ross here. How are you? Where do you foresee the risks at the moment, and how are you hedging that in your investment strategy?
That's also a very good question. Thanks. What we do is a change in asset classes, not only asset allocation, but asset classes to avoid cluster risks in equity positions. A very good instrument for this is structured products and managed futures. So we actively use financial derivatives in structured tailor-made products for our clients to avoid these risks. This market is huge. It's enormously growing, especially over here in Europe. You can say that all large institutional players, large investment banks use financial derivatives. It was very much an institutional market the last 20 years, but especially over the last 2, 3, 5 years, it's becoming more and more a market interesting and opening up for private investors, and this is where Helvetia Wealth is concentrating on. Coming back to the region, Switzerland is probably has one of the best banking systems in the world, and is among the leaders, and so is Helvetia in the field of derivatives. We do have equity exposure, but today you can build and construct ways around the downside risks with hedged solutions and also guaranteed products, for example.
Felix, it's more here in Asia, but as the derivatives market becomes more attractive, especially to the private investor, doesn't that also expose them to more volatility as well?
Yes, very much so. We see a big demand of people because after a four-year bull market, the air is maybe getting a bit thin up here, and it's not that we sell stocks in all positions, but we do tell our clients to allocate more and more of their investments into safer structures. Give you an example, you can divide your exposure into the three main asset classes: equities, of course, but also bonds and also commodities. And there are structures out there which are available for private investors, which are combining these three asset classes with a hedge component to the downside, but full participation on the upside.
Easy path to diversification. Thank you, Felix. Felix Donner, Director of Investment Management with Helvetia Wealth. Maura.
Thank you.
Still to come, it has done it. The dollar has hit 2 against the pound for the first time since 1992. We'll look at the wider ramifications of breaching this important psychological barrier. What are your thoughts about what this means for global currencies? Or heck, what were you doing in 1992? Email us. We want to hear from you. Worldwide@cnbc.com.
Just because